Good evening to you. At this hour on the business desk, Barloworld's performance took a hit mainly due to its Russian unit amid global trade tensions and tariff uncertainty. That's as group revenue dropped by almost 6% and a 20.5% fall in headline earnings per share. Barloworld is under investigation by the U.S. Bureau of Industry and Security for potential export control violations. The company has been granted an extension until September to complete its investigation and submit a final report. Barloworld is also still in talks with a consortium of investors for a possible takeover. That deal could see Barloworld delist from the JSE. Despite reporting lower earnings, Barloworld has declared an interim dividend of 120 cents per share. CEO Dominique Sewela discusses these developments with us. Thank you so much for your time, Dominique. Trade tensions affecting Barloworld's performance. Tell us the extent of the impact as the Russian operations have weighed down overall activity.
Yes, I think, the Russian operation has certainly weighed, down in terms of the current trading. But it started last year when we unfortunately found, that the business has breached some of the export control measures, and because of that, we deliberately, started stopping the inflow of parts into that part of the world, and to ensure that we don't actually exacerbate the issues, because we voluntarily sort of reported ourselves to BIS and appointed an independent expert investigator. So from that point of view, the addressable market is small because of sanction, and we don't have the requisite product to supply to the market. So that's really why you're seeing the revenue drop in that part of the world. If you adjust for Russia, though, the revenue drop for Barloworld is about 2.2 percent down to about 16.8 billion, which is not bad in this very tough, down cycle and challenging economic environment.
And that's exactly where I want us to go in terms of an overall picture, as you rightfully alluded to there. I'm interested in finding out the strategy to be employed by Barloworld, given that global uncertainty is likely to remain for some time, given the tariff issues that come with the U.S., as well as what we term as a geopolitical dispensation in the current day of doing business across the world.
Fundamentally, our strategy has been, to operate in these challenging geographies, but we wanted them to be contiguous. But what we liked about these geographies is that they're diverse in nature, and physically. And then the other inherent diversity is in around the commodities, because if you look at all the areas where we operate, some of the commodities are up, some of them are down. That's one of the key issues that, we've employed. But also we said we need to focus on the levers we can control. And, business systems, or Barloworld Business Systems focuses on ensuring that we have empowered our employees to continuously seek on making smaller improvement on a daily basis. That will ensure that, the business remain resilient even in tough environment. And this is what really has sort of made us survive various challenges over the years. Fundamentally making sure that, cash is important, strong balance sheet, and cost containment. And our view is that, the cycle will turn. We need to make sure that we are ready when the cycle turns by not cutting deep into our muscles when we cut costs or we focus on cost containment.
Is that the same treatment that you would be implementing in Southern Africa? Because we do also see that decline in Barloworld's equipment.
Fortunately, what we've done in Southern Africa, if you remember, last year, we basically implemented Section 189. In anticipation of the climate that we're operating in. So you can actually see the benefit of those initiatives that we took prior to where we are. We've seen, the business still perform above, our expectation in terms of return on invested capital in Southern Africa. When you look at profitability of our ingrained business, similarly, even though the volumes were flat, but it delivered, profits higher than last year.
Lastly, what's to be said about progress when it comes to the acquisition and the domestic consortium that is looking to buy into Barloworld?
Yeah, I think you'll appreciate that I'm conflicted in terms of that. I think I'm here in my capacity as a CEO. What I can, tell you is basically what the company has announced, that the scheme of arrangement had failed. And once the scheme of arrangement failed, there was a standby offer that was put in place by the consortium. Currently, the process is going, shareholders are tendering their shares in line with that scheme. And I think what would happen by end of June, the consortium will have to announce whether or not, they are lowering their threshold, from 90% to a number that they're comfortable with, which will mean if, not all shareholders have tendered their shares, Barloworld will remain listed. However, if they're able to get, something above 90%, then there'll be a squeeze out which will lead to the delisting of the company.
I absolutely appreciate your response there and indulging me with that reply. Thank you so much for your input. As always, that's Barloworld CEO Dominic Sewela talking to us about the overall financial performance of that company.